Hi, good week to all. This is Calvin here again. Welcome to this week's latest edition of our weekly technical outlook on the major stock indices for the week of 9th of May to 30th of May 2022. So I'll be covering the latest trend bias and key levels to watch for this week on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 40 stock indices. So before we start, let's take a look at the disclaimer slides first. Okay, so first up, we'll be looking at the momentum analysis of last weekly performance, and as well as compare it to the prior week, and as well take the difference of last week performance minus off to its prior 4 week average to see a gauge whether has upside momentum or downside momentum has started to actually ease off or it still remains pretty much intact. So before we go and jump into the details of the various columns, let's take a look at last week performance first for the week of 2nd of May to 6th of May. So all in all, we could see for global stock indices, all of them has been in the red, and the worst underperformer is the China-related stock indices, which the Hang Seng Index is down -5%. The Hang Seng Tech Index is down -9%, or close to -10%, a double-digit decline. This is primarily due to this ongoing stringent COVID zero strategy that's being adopted by the China top policymakers that could actually slow down Chinese growth significantly in Q2, which in turn led to a further weakening of the Chinese yuan. So that actually pressured the China-related stock indices, we call it stock indices, much more negatively compared to the rest of the world. And what's interesting over here is the SPX 500 and the Nasdaq 100 and the Dow Jones Industrial Average, all of them have started to actually ease off in terms of their downside momentum for last week versus its prior week. You can see the SPX 500 is down -0.21%, almost unchanged, but still was hit is the tech-heavy Nasdaq 100 and as well as the small cap Russell 2000, both down by slightly more than 1%, -1.25% and -1.32%. This primary reason of their underperformance is due to their higher sensitivity. That is, they reacted more negatively towards a further increase in longer term US Treasury yield. All right. And what we could see in Europe, the German DAX also performed quite badly as well, relatively to its US counterparts. They're actually down -3%, and the Nikkei 225 is up 0.58%. But nevertheless, this is only one spectrum of we call it technical tool that we usually use to analyze the market. But on top of that, we also need to look at other technical picture like trend analysis of their individual market, which is the individual stock indices, to actually get a complete picture to decipher its trend bias going into this week from here. So before we actually jump into that picture over here, is that notice that if you especially on the US stock market, the US stock indices, pardon me, if you compare last week performance against the average, the difference of its prior 4 week average, you start to see momentum, downside momentum has starts to ease off as this number starts to turn positive on the US major stock indices, on the major US stock indices. Like I said earlier, we need to actually take into account of other technical elements to actually say that, hey, is the downside momentum slowing down, where we could potentially see a counter trend rebound, at least for this week, or because are there other elements that are still bearish that the chances of this counter trend rebound remains remote at this juncture. So before we jump into the technical analysis chart of that individual with the various individual stock index, let's take quickly a recap of last week's performance on the 11 key S&P sectors that made up of the SPX 500 index. So what we could see is that 5 of them are in the green, but I want to highlight the top performer is very clearly and it outperforms significantly by a wide margin, which is the SPX 500 energy sector. For the ETF, the ticker code be XLE, so outperformed by 10% versus a loss of -0.21% on the SPX 500. This is actually on supported by firmer oil prices since in the last 2 weeks. From here, and most importantly, oil prices actually inching upwards towards a key breakout level that could actually see a potential bullish breakout above a 8 week of a range consolidation that is in place since early March this year. So if you want to find out more about this global macro picture of what are the various instruments doing, oil, and how does it impact the rest of the market, do actually follow me at my social media, which is I actually tweeted actively in my Twitter account. So that I'll share with you how to actually follow me on my Twitter account so that you guys could able get the sense of what's driving the movement in global markets uh, in the shorter term perspective as well as a longer term perspective. So now let's quickly jump into the technical chart that I will share with you all. Okay, so first up, right, before we even go into that strategy chart, so the strategy chart will be 4 week, it's a 4 weekly chart, 4 hour chart, pardon me. My point is a 4 hour chart. But before we jump to the 4 hour chart, it's good to take uh, uh, one time frame above the 4 hour chart, which is the daily chart, to give us a gauge about how the technical elements are actually performing right now on a higher time frame basis, so we're able to see a much clearer picture. So we could see is that this is the SPX 500. Since its all-time high printed in early January this year, prices has been coming downwards and it started to trade below the 50-day moving average. All right, since 21st of April this year, which indicate to us that the medium-term downtrend remains intact, and as well as the longer-term uptrend, the major uptrend that is in place since March 2020 low is now being challenged towards the downside, as we could see that price action failed. There's actually a failure a breakout on 28th of March and reintegrate back below it, and thereafter it tried to break again, break above it again on 21st of April, and it failed to do so and shaped that recent multi-week down move that we start to see so far currently. So overall, right, the trend bias still remains bearish on a medium term basis, as indicated by the 50-day moving average, which indicates that hey, there is a stronger potential for us to see a further down move this week on the SPX 500. And the latest element I'll share with you is currently intraday, because this is the SPX 500 as quoted on our CMC Next Gen platform, where we're actually taking the price action from the futures market that is trading right now in Asia time zone, the E-mini. We're actually using the prices of that to infer our product, our this cash SPX 500 cash product on the CMC platform. So you could see that price action now is trading below this dotted gray line. So what is dotted gray line? Is in fact the former expanding wedge resistance that was taken out earlier part of 2 years ago in mid-December 2020, and since then prices kind of retested it twice on 4th of February 2021 and 4th of March 2021, both actually shaping higher highs going forward in the next couple of months. So price action now has really reintegrated back below this dotted gray line. Previously, it acted as a defense against a previous bearish tone, but apparently this defense is getting relatively weak right now, as we could see as price action actually breaking down below this dotted gray line, which is also supporting further downside potential in this coming week. And downside momentum wise on the daily chart, which is I would say the medium term downside momentum still remains intact after the RSI retested of as a bearish reaction of this former support turns into a resistance level. Bearish reaction of it of 4th of May and continue to inch downwards thereafter. Right. So all in all, technical elements on the daily chart still pointing towards a further potential downside pressure in this coming week. So on the SPX 500, what we do is that we actually kind of tighten the key medium-term pivotal resistance to 4310. So as long as 4310 holds, we do expect a push down towards 4040, perhaps a bit of bounce for off from 4040, as we could see that the 4-hour RSI is coming very close to the oversold region from here. Then thereafter, we may start to see a further push down towards 3930. So what's 3930 is actually the confluence of a Fibo extension level taken from the high of 5th of Jan, the all-time high, and as well as 30th of March, the recent minor swing high. And most importantly, also graphically, the lower boundary of this descending channel, this minor descending channel that is in place since the all-time high of 4th of Jan 2022. So overall, still having a bearish bias as long as 4310 medium-term pivotal resistance is not surpassed to the upside. However, if we start to have a 4-hour close above 4310, then we could actually start to shape this potential short-term corrective rebound towards the top of this channel. The descending channel resistance at 4520, maximum the swing high area of 4640. All right. So now moving on, next will be the Nasdaq 100. So what's in store for the Nasdaq 100 is also pretty much similar in terms of their daily technical elements, where price actions still are trading below the 50-day moving average. And what's interesting is much more weaker than the we call it the SPX 500, where the 200-day moving average was actually shaped this bearish reaction one time on the earlier February 2022, the second time of 10th of February 2022, and the third time on 20 March 2022, and the fourth time on 5th of April 2022, all stubbornly refusing to break above that 200-day moving average. So what it means to us that the longer term major uptrend is also being challenged to the downside from here. So what we could see over here right now is we're actually saying that, hey, uh, at this moment in time, technically there is no clear signs of a what you call it bullish elements to actually indicate to us that there will be a chance of a medium-term bullish reversal on the Nasdaq 100. So overall, we are still actually seeing more further downside potential instead of a medium-term recovery on the Nasdaq 100 at this juncture based on the current technical elements and also the daily RSI uh, shaping the similar configuration like the SPX 500 that I shared with you earlier, bearish reaction of 5th of May from this former support turns pullback resistance and still has room to actually go inch down lower before heading before actually reaching its extreme oversold region at around the 24% level. All right, so all in all, right, what we could see over here is that we still expect further potential downside on the Nasdaq 100 potentially. Okay, so now what's up next on the 4-hour chart over here is that we actually have a key medium term pivotal resistance at 13,800. So as long as 13,800 is not surpassed to the upside, we're still expecting a further potential downside potential towards 12,410, 12,210. Then thereafter, maybe a bit of bounce up towards 12,920 because the 4-hour RSI is coming very close to the oversold region and breaking below 12,210, we may start to see a next support level for it to go down much further, potentially towards 11,600 and 11,440. So what's 11,440 is actually a confluence of a Fibo extension level taken from the high of 22nd of November 2021, that's the current all-time high, and as well as the current minor swing high at 30th of March 2022. So, but however, we start to see a 4-hour close above 13,800, then we could start to see a shape of at least a short-term counter trend rally, or we call it a corrective rebound to actually retest 14,310, then thereafter followed by the minor swing high area of 30th of March at 15,280, which also correspond very closely to this range top that is being represented by the also the 200-day moving average. All right, you can see from here. Now, moving on to the Hong Kong 40 index or the Hong Kong 50, pardon me. So bear in mind that Hong Kong today is actually closed for a public holiday. So all in all, right, we're still expecting further down move on the Hong Kong 50 index using 21,600 as a key medium-term pivotal resistance to maintain our bearish bias. So now it's coming very close to the support level that we defined earlier, which is 19,200 slash 18,990. So what's this level again? Is in fact the 76 point, yeah, close to the 76.4% retracement of the last push up or the last rally from 15th of March to 4th of April 2022. So don't bear in mind that the RSI also coming very close to the 4-hour RSI coming very close to its oversold region with the extreme oversold level at 17%. So what we could see is a bit of rebound from here at this 19,200 slash 18,990 before another down leg to actually retest the March swing low of 18,136 followed by 18,050. All right, still having that bearish bias as long as 21,600 medium-term pivotal resistance is not surpassed to the upside. But however, if we start to see a 4-hour close above 21,600, then we could start to see a push up towards the top of towards this major range resistance of 23,000 slash 23,380. So bear in mind this is a key resistance level. Why? Because formerly this is the weekly chart. This level here was previously the ascending trend line that is drawn from the great financial crisis low, which is October 2008. And since then, prices managed to held above this ascending trend line support from the great financial crisis low, which is October 2008, and until recently it actually breakdown stage, clearly a bearish breakdown below this level, and the pullback resistance now is actually 23,000 slash 23,380. So definitely this is a level for us to watch whether will the longer term bearish force start to reinsert itself after price action potentially retest this level if the 21,600 is being surpassed on this week. All right. Now, going on to next will be the Nikkei 225. So the Nikkei 225, we call it the Japan 225 index in short in our platform. So what we could see is the Nikkei 225, right? If we go on to the daily chart from here, so daily chart shaped this bearish double top, which we previously highlighted, and since 14th of Sep 2021, price action fails to actually break above this major descending trendline resistance. So there was actually a kind of a failure breakout on 29th of December, and price action starts to shape lower low from there. And right now, this descending resistance from the highs of 14th of September 21 is now acting as a resistance at 26,700, 760 level. All right, so RSI also pretty much weak as well on the downside after failure to actually break above clearly the 50% neutrality level, and now it's inching back to actually reintegrate back below the oversold region again. So indicate to us that medium-term downside momentum apparently start to resurface for the price action of the Nikkei 225 to pretty much potentially push lower for this coming week. So what is the next level to watch for this week will be definitely 27,760 will be my key medium-term pivotal resistance. So as long as this level didn't break up to the upside, we still expecting a push down towards 25,700, followed by 25,410 level. So this is a cluster of minor congestion resistance zone over here, as you could see from the price action from 10th of March all the way down to 15th of March. And also, if I were to draw a Fibo retracement taking from the low of 8th of March to the last rally up on 29th of March, it's actually the 76.4% Fibo retracement level. So there's a confluence of Fibo and graphical congestion zone indicating to us that, hey, seems to be a strong magnetic point or inflection point for the price action to actually shape a further potential downside towards this support zone. So as long as 26,760 pivotal resistance not surpassed this week. But however, we have a 4-hour close above 27,760, then we could start to see a shape of a corrective bounce, a more pronounced short-term, we call it medium-term corrective rebound towards the retest, the high of 30th of March at 28,680. Then thereafter, potentially followed by 5th of Jan 2022 swing high resistance at 29,390 here. Now, last one that I'll share with you all will be the German 40 index. So as you can see on the 4-hour chart itself, the daily time frame is also indicated to us pretty weak. Price action also failure to break above this all-time high, the retest of the current all-time high level on 4th of Jan this year, and thereafter prices start to trade a lower high. And right now, it's being kept by very clearly this descending trend line resistance that is in place since the start of this year, so close to a 5-month descending trend line resistance. Now resistance at 14,320. So all in all, what we could see is there was actually a retest from the 7th of March low, a corrective rebound to retest close to that pullback support level, that former range support, now pullback resistance at 15,030, and price action start to shape lower high and lower low thereafter. So indicate to us that, hey, uh, on the medium term, price action are still favoring more on the bears than the bulls. So actually supporting us a further potential down move for this week. And also RSI, so daily RSI remains weak below a key corresponding resistance at the 52% level. If you look at how the RSI shaped this bearish reverse bearish reaction of this 52% level, and previously all of them are being shaped right exactly at the descending trend line resistance graphically as well. So momentum to us is indicating pretty much weak. So there's a risk for us to retest 12,430, which is the 7 March low in the coming weeks ahead. So as for this week strategy, which is the 4-hour chart, so what we do over here is that we will actually tighten the key medium-term pivotal resistance to this descending trend line resistance that is in place since early part of January this year, which is now acting at resistance at 14,320. So as long as 14,320 holds, we may start to see a further decline towards 13,600 slash 13,340. Then thereafter followed by the next support at 13,020 level. So 13,020 level is actually this minor graphical congestion zone over here. And if you draw the Fibo retracement taken from the rally of 7 of the corrective rally of 7 of March low to the high of 29th of March is 76.4% retracement. So we start to see a confluence of Fibo and as well as graphical support level, indicating to us there's a strong inflection zone where price action could actually come down much further for this coming week. But nevertheless, do not forget that it's on the 4-hour chart, the 4-hour RSI is coming very close to the oversold region over here, which is the extreme oversold level at 20%, where price action in the past managed to shape a bounce previously from here, as you could see previously at this point in time. Price action shape a bounce here as well, a rebound in price action, a rebound in price action once the RS4 RSI hit this we call it a relatively extreme oversold region at this 20% level. So all in all, right, that level could actually correspond to the first support at 13,600 slash 13,340, where we could start to see a bounce off from there to actually test this resistance at 13,800. Our maximum will be the key medium-term pivotal resistance. So as long as this level is not being surpassed on the upside, that means there's no clear 4-hour close above 14,320. We still do expect price action to actually drift down lower to retest the next support level, potentially at 13,020. But however, 4-hour close above 14,320, then we will start to see the shape of another leg of corrective, short-term corrective rebound towards 15,030 level. So what's 15,030 level? Bear in mind over here, this is the key, the former range support now turns into a pullback resistance at 15,030. So all in all, right, the broad-based this broad-based story is still bearish on major stock indices, but do expect a minor bounce coming forward into this couple of days as the 4-hour the respective 4-hour RSI oscillator is coming very close to the oversold region. But on the bigger time frame, we still expect a further potential down leg on this major stock indices that I share with you all, as long as their respective key medium-term pivotal resistance is not surpassed to the upside. So do have a great trading week ahead. And before we go, let me share with you, this is my social media channel. So you can actually follow me at Kelvin SC Wong. So just open up a Twitter account, it's free. So once you follow me, do on the notification and you could actually get latest update on what's going on in the markets, and as well as a daily commentary that is out every morning Singapore time at around 8:30 to 9:30 a.m. So with that, have a great trading week ahead, and I see you again in my next video.